Let's be very clear. March 2026 is going straight into the history books as the absolute worst month for Indian markets since the COVID crash back in 2020. I mean, 20 lakh crore rupees. Just gone, vanished. But then, on April 1st, something changed. A rally started to kick in.
And that brings us to the one question on everyone's mind, the one we're going to break down right now. After all that carnage, is this bounce for real? Or is this a classic bull trap, just waiting to snapshot before the next big drop? All right, let's get into it.
You see this number? This number is what defined March. Negative 1.14 lakh crore rupees. To put that in perspective, that is the mind-boggling, record-shattering amount of money that foreign investors yanked out of the Indian market in a single month.
And just to understand the sheer scale here, this outflow didn't just break the old record from October 2024. No, it completely obliterated it. This mass exodus of cash was the engine that wiped out over 20 lakh crore in market value. So you have to ask, what on earth caused it?
What forces came together to create this perfect storm of capital flight? Well, here's the twist. The answer wasn't a problem in India, but a problem that flowed into India from the outside. Let's trace exactly how that happened.
And this visual just lays it out perfectly. It was a chain reaction, a real doom loop. It all kicked off with geopolitical conflict, which sent Brent crude oil prices through the roof. Now, since India imports something like 85% of its oil, our national credit card bill basically exploded. That put huge, immense pressure on the rupee, and it collapsed to an all-time low. Now think about it. If you're a foreign investor, a falling rupee is toxic. It eats away at your returns when you convert back to dollars. So what do? You sell. And that selling, well, it just puts even more pressure on the rupee, and the whole cycle just spins faster and faster.
And then came April 1st, a tiny glimmer of hope. Some news about potential de-escalation hit the wires. Oil prices pulled back a bit, and the market staged this sharp relief rally. But, it would be a huge mistake to pop the champagne just yet. The underlying risks, they haven't gone anywhere. This contrast right here tells the entire story. On one side, you've got the green shoots of that April 1st bounce. Looks good, right? But then you look at the official SEBI risk dashboard, and look at those top two lines. Systematic risk, that's the risk of a total market collapse, and currency risk are both flashing very high. So what we have is a hopeful little rally happening smack in the middle of a five-alarm fire.
And this table just breaks down that contradiction perfectly. The Nifty bounces. Great. But at the exact same time, the rupee is still in the ICU, we're staring at the worst foreign investor outflow in history, and the VIX, the market's fear gauge, is still way up there. These are just not the signs of a healthy, confirmed bottom. Not by a long shot.
Okay, so let's shift gears and bring it back home. Because there are three massive stories playing out right here in India that are going to decide whether this rally has legs or if it's about to fall flat on its face.
First up, the RBI basically threw the entire broking industry a lifeline. A whole bunch of tough new rules are supposed to go live on April 1st. These would have forced brokers to hold way more cash, seriously squeezing their business. Well, at the last minute, the RBI kicked the can down the road to July 1st. That sparked a huge relief rally in stocks like Motilal Oswal and Angel One. But here's the key. The risk is only postponed. It's not gone. July 1st is the new D-Day for that whole sector.
Second, we saw a massive move in the corporate world. After a truly disastrous operational meltdown, Indigo, India's biggest airline, made a huge power play. They appointed Willie Walsh, a legit global aviation heavyweight, as their new CEO. And the market absolutely loved it. The stock just soared. Now, this isn't just about hiring a new suit. This is a strategic move to bring in some serious credibility and a powerful voice to push for the big reforms that the Indian aviation sector desperately needs.
And third, this is a big one. The entire tax landscape just got a massive facelift. The 65-year-old Income Tax Act of 1961, it's gone, officially replaced. The new act is simpler, it gets rid of confusing timelines, and it expands HRA benefits to big tech hubs like Bangalore and Pune. For traders, though, the cost of doing business just went up thanks to a hike in the securities transaction tax.
So, just to recap, we've got foreign money fleeing, a currency crisis, a last-minute reprieve for brokers, a new airline CEO, and a brand new tax law. They all seem like totally separate stories, right? Well, they're not. They're all connected by one single, invisible thread. One price that is dictating everything.
And that price is Brent crude. Think about it. High oil prices weaken the rupee, which makes foreign investors sell. It also creates imported inflation, which ties the RBI's hands and stops them from cutting interest rates. And of course, it directly crushes the profits of the entire aviation sector, which is what forces a move like Indigo's. Every single story we've talked about today leads right back to the price of oil.
This says it all, really. The bet is not actually on India. The bet is on where crude goes next. This is so important to understand. The pain India felt wasn't our fault. It was an accident of our geography and our dependence on imported energy. And the bet that investors are making right now isn't really on Indian companies. It's on that one single price. If crude falls, India's market could be one of the biggest winners on the entire planet.
So, with that framework locked in, what does all this mean for you? Let's turn all this analysis into an actual, actionable outlook for the next 90 days.
Okay, go ahead and mark these 3 dates on your calendar. April 6th, that's the big geopolitical deadline that could send oil soaring or send it crashing. July 1st, that's when those deferred RBI rules for brokers finally kick in. It's a reality check for the whole sector. And August 3rd, that's when Willie Walsh officially takes the controls at Indigo, kicking off what could be a major corporate turnaround story. And finally, SEBI has put out some official guidelines for how to navigate this mess. The core message is simple: play defense. First, double-check that your holdings are secure and rerun the numbers on your trading costs under the new Tax Act. Second, and this is crucial, this is not the time for leverage. And most importantly, you have to treat that April 1st bounce with a healthy dose of suspicion. It is not a confirmed bottom. The mantra right now is caution and discipline.
Which leaves us with one final and kind of provocative question. We've seen that all the domestic stories matter, for sure, but they are all downstream from one global commodity. So, with oil being the undeniable master key, is the Indian market's fate now almost entirely out of its own hands? Something to think about.